Quick question. If you open your QuickBooks online right now, would you be able to tell me how much each individual property made last year? If not, stay tuned, I'm going to teach you how. All right, let's get started.
Hi, this video is specifically for real estate investors who have multiple properties at different locations, not multiple units, and you need to file a Schedule E separating the income and expenses for each property. This would be more specifically if you have 3 properties inside of one LLC. So I'm Laurie from Hudson Valley Bookkeeping, and I specialize in real estate bookkeeping. All right, so let's get into it. What we're looking at right now is a profit and loss that actually has the income and expenses for 3 separate locations, right? And right now it's impossible to see the income by location as well as the expenses by location. And at year end, you are required to report to your CPA so he or she can fill out your tax return. They would need this segregated. And so what some people do, and I'll show you in a second, is they maybe just notate inside of here what expense was for each transaction. So you'll see in the memo, I have the 3 different locations, but that's not really going to be helpful at year end because you would literally have to export everything into Excel and try and figure it out and not make mistakes in Excel. So the answer to this is to use class tracking in your QuickBooks. Now, unfortunately, this does require that you get the Plus subscription. So I'll just show you, it's called Plus. Mine's through my accounting firm though, so it might not show it. Yes. Okay. So it's QuickBooks Plus. It is expensive, but just remember, don't miss the forest for the trees on cost. Okay. So what are we going to do? I already have the Plus version. So if you don't have the Plus version, the first thing you have to do is upgrade. So you would come to this billing page and you would say you want to upgrade. I can't upgrade. Let's see. Does it show me? Oh, I can't show you because I'm in my my accounting firm pays for this plan. It would show you that you could upgrade and offer to move. So if you're in Essentials, which I love Essentials, but if you have multiple locations you need tracked, then I would suggest going to Plus and just paying the money. Okay, now that we've got that figured out, the next thing we have to do is enable classes. So we're gonna go here to Account and Settings, Advanced, and right here under categories, we're going to turn on classes. I would not turn on locations. I've never been a fan. I don't find it to be helpful. Okay, and then it says track classes and then warn when a transaction isn't assigned a class. So that's as you're signing things, which won't happen, I think, today because I've already posted the transactions, it will let you know, hey, you forgot. Okay, so now let's just look at what our goal is for today. We have 3 separate properties and we need the income and expenses segregated. So we just went over the QuickBooks Online Plus, and these are our 3 addresses. These 3 addresses will be our classes, and then our next class would be general. I'm not going to do any of that today, but you would need one for general and administrative. That could be for your QuickBooks file, office supplies, things that aren't specific to one location. Okay, so now let's go back to the QuickBooks. We're going to hit the gear icon, and under lists, you can say all list. And then there's classes. So I took out some other ones I was using before, but here is that G&A. Our first class will be 123 Main Street. Railroad. So now we have our classes created. The next step is to allocate them to the correct transaction. So I've already posted some income and expenses. So what we'll do is we'll run the profit and loss for January. We're only going to do 1 month. I'm going to do the expenses first. I'm going to show you how to do that. So again, we created our classes. It's better not to do things on the fly. So it's easy to see which class I should assign because I have it in the memo. So if you've already, or you're not, maybe you're a bookkeeper or you're a real estate investor, you'll have to delineate and understand which properties have which vendors. So for me, it's easy for me to pick because I went ahead and I have notes. So I'm going to allocate all the expenses and then I'll be back. Okay, so now I have segregated and added a class to every transaction for the month of January. And you can now see the performance of each property, the expenses, and the net income. So we have 2 properties losing money and 1 with a positive. And that doesn't even, so that's the difference. So let's just go back to what we had before and then again, what we have now. So I can click here and click duplicate. And instead we'll just go back to a regular profit and loss. Without the classes, you can't get to the 3 columns. So we're just gonna pick regular profit and loss and we'll pick the month of January. Here, we have the net income for the 3 combined, but without the classes, we can't delineate the income and expenses. So let's go back to what we end up with. So this is much better for any entity you have that owns multiple locations because the Schedule E requires that you report your income and expenses by location. So you're going to need this. I will warn though, that if you have multiple LLCs owning multiple locations and they're different entities, I would not put them all in one big QuickBooks. For that, that's a totally different scenario. So for this scenario, we've been talking about one entity that owns multiple locations. That normally will happen through 1031 exchanges. And as you sell one property and maybe you buy 2 or you continue, that's usually a lot of times where I see multiple properties. Why do I say you shouldn't put every property you own in one QuickBooks file and then try and manage it that way and save money on the QuickBooks subscription? My main reason is the balance sheet. It is almost impossible to keep a good balance sheet if you are transferring money between the accounts, which almost every real estate investor does. So if, let's say, 123 Main Street is low on money, you send some money from the 40 Railroad checking over to there. But you would then create a due to from, there's different things where you have transfers messing up that balance sheet, and it really becomes very difficult at year end. So I would assume, even on this one, that as an entity, it may have 3 checkbooks and it may move money between the accounts, but that won't matter because for the entity purpose, we have the correct balances in the bank balance. It does not work out that way when you have multiple entities in one QuickBooks with lots of transfers. So I'm warning you against that now. We are talking specifically about multiple locations owned by one entity, and this is how we should put it in QuickBooks and be able to segregate using classes. I hope this was helpful. Please reach out if you need QuickBooks coaching. And I'm, again, Laurie from Hudson Valley Bookkeeping. Have a great day.